What's up, guys? I have another emergency video for you. We're going to be talking about Alibaba stock. So Alibaba is down almost 20% over the last day. So in this video, we're going to go over why that is. We are also going to touch on why the business is actually positioning itself in a better position due to this drop. And then finally, we're going to touch on what I am actually doing. Am I buying more shares? Am I selling out of my position? Where am I at with the stock? So if you enjoy the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. As I mentioned there, we are down 15% on the stock today. Over the last 5 days, we could see that Alibaba was trading in the 75 all the way down to kind of 70 range. And then over the weekend, there was some news that came out and the stock dropped all the way down here. You could see to a low of $58.01 and has kind of bounced a little bit back. So it's trading right now at $61.33. And obviously it's during the trading day. So this is changing as we speak. So we can see here that it's down almost 21% over the last 5 days. So why are Alibaba and the rest of the Chinese tech market dropping so dramatically? The reason for it is that Xi Jinping has secured his third term as Chinese president. Chinese technology stocks tanked Monday after a political reshuffle in the world's second largest economy, tightening President Xi Jinping's grip on power, with investors fearing that this could be a negative for private firms. Tech giants Alibaba and Tencent closed down more than 11% in Asia. The moves come after Xi Jinping paved the way for an unprecedented third term as leader and packed the Politburo Standing Committee, the core circle of power in the ruling Communist Party of China, with loyalists. So obviously this has had a huge impact on the stock market. And basically what the market is looking at is they are seeing that Xi Jinping has stepped in and he has reshuffled his entire cabinet. He's put a lot of people who are loyal to him and loyal to his policies in positions of power. And what that means is there will be less challenging of any of his decisions. And over the last couple of years, we have seen a lot of questionable decisions, at least as far as businesses are concerned, looking at China and seeing whether it's an investable market. Is the zero pandemic policies, a lot of the fines and restrictions on tech companies, all of those have impacted China's growth as an economy, and especially those Chinese big tech businesses like Alibaba, Tencent, Baidu, a lot of these other, JD, a lot of those businesses that are positioned in China and looking to grow and seen as investable a couple years ago before a lot of these policies came in place. But now with these new policies and the continuation of these policies, a lot of these investors are fearing what this could mean for growth for those companies. So again, to reiterate that point, we have Jing Sun, a senior lecturer in Chinese and Eastern Asian business at King's College in London, said, now that the new Politburo Standing Committee is packed with Xing's own picks and those in rival fractions were all out, it becomes clear that no other political elites dare to challenge his policies, mistakes, or even deviate however slightly from his preferred policy agenda, which of course over the past few years has focused on favoring the state sector at the expense of the private one. So this is what a lot of investors are looking at, right? Is that these policies are now in place. There's no one to really come in and challenge them to say, hey, no, we should be doing things a different way. And overall, they are expecting that China is going to continue down the same path, right? With the zero pandemic policy, with a lot of the Chinese tech tightening and fines that have been put on the Chinese tech sector. So basically investors are looking at China as being less and less of an investable sector, which is very kind of different than how I would actually look at this, but we will get into that later in the video. And these last few sections are the things that I've kind of touched on already. So China has implemented a raft of policy that has tightened regulation on the tech sector in areas from data protection to governing the way that algorithms can be used. China has also stuck to its zero pandemic policy, which has seen cities, including mega financial hub Shanghai, locked down this year, even as the world has opened up most of their economies. And then both of these policies have contributed to billions of dollars of valuation for tech giants being wiped out, such as Tencent and Alibaba. So All of these things basically have been put in place, and they have really hurt the Chinese economy, a lot of Chinese tech businesses and businesses in general across China, due to just basically the economy slowing down, right? If people can't move around, if things aren't opened up, then there's generally going to be the slowing down of businesses. And it's very weird that China has stuck by this policy as the rest of the world has opened up, almost entirely, right? The US is back to basically full capacity, and China is still sitting there, shutting down cities if there's even the slightest of outbreaks of the pandemic. So it's very interesting, the different stance that China has taken over the last year on their zero pandemic policy. So let's go ahead and jump into my opinion on all of this. And my opinion I've touched on in a few different videos, but I think the newest point that to bring up here is that this has obviously been an election year in China. And a lot of what you see from political figures during an election year is trying to appease to the majority of people, right? We saw that last year in the US as a lot of politicians started taking aim at policies from Trump and also proposing their own policies in terms of Joe Biden and what he was proposing, without getting into too much of the politics. But basically what we could have seen from China and from Xi Jinping is that he took a very hard stance on a lot of these very people-oriented topics. So the zero pandemic policy, right, taking aim on that to try and reduce how much the pandemic spread in China, that would be a huge political win for Xi Jinping, right? Focusing on that, getting a lot of voters to back, his policies, and taking an aim on how he can protect as many people as possible. So that is one thing that I could see him transitioning away from over the next year or so. Now that he's secured another 5 years and he's kind of packed his political committee with a lot of people who follow him and agree with him, he can basically transition to a different stance of, okay, we've addressed the pandemic problem. Now we have this huge housing market problem that's coming up in China, where the housing market in China is basically collapsing, similar to what we've seen in 2008 in the US. So now it may be a good time to transition away from that and actually focus more on how can he impact the economy in a positive way over the next 5 years. Right? He's taken away a lot of the short-term problems, and now there's a lot of economic problems within China that he needs to focus on and actually figure out how to drive a lot more growth within China that is going to help people overall over the next 5 years. So this was actually the first article that I read on all this when I woke up this morning. I read this and it says US listed Chinese stocks drop 20% after Beijing's power reshuffle makes the market uninvestable. So uninvestable is a very harsh term, but very interesting, because basically that is how investors are looking at it. They are looking at the market. They are seeing the policies that Xi Jinping has put in over the last year and saying that he is going to continue with those policies moving forward, which is, we've seen him already actually say a different opinion a week ago with saying that he was going to loosen up restrictions on Chinese companies. But apparently that doesn't matter to the market right now. They are just seeing it as uninvestable. So again, what's very interesting from this article is they have all this negativity in the article, all of this about, the Chinese stock market dropping, Xi Jinping tightening power. But I highlighted this point because they hid this under a picture. So more and more Asian companies have announced share buybacks in recent weeks. China's internet tech giant has said that it will increase its share buyback program from 15 billion to 25 billion. And this is absolutely massive, because what happens when companies buy back their shares is basically they're reducing the amount of shares that are out on the market. So when EPS comes out, earnings per share, right, there is more earnings to distribute over less shares. So what that means is the PE ratio will fall on companies like Alibaba, which is already extremely low. If we jump over here, this is saying it's at a 30, but I've seen a forward PE ratio, below 20. And we are going to see that continue to drop as Alibaba buys back shares. And especially if we see policies turn around where China opens up more, right? Earnings per share will increase just naturally because the economy will be more open. But then on top of that, again, with these buybacks, that'll just compound. So that will just make China and Alibaba more and more interesting in terms of their valuation. So with all of that, where am I actually positioning myself? Am I buying or am I selling? And the answer to that is I actually doubled my shares today. So I found this as a perfect opportunity. This is a lot of political news. We don't actually know what is going to happen going forward, right? Xi Jinping has actually indicated a lot of positive things where he potentially will reduce regulations on tech sector and hopefully take a lot more focus on the economy within China, which in turn should help a lot of businesses like Alibaba, Tencent, the Chinese economy just in general. So I actually doubled my shares, and there's two reasons for it. One, I extremely lowered my cost basis, right? With the stock falling 20%, basically that plus where I was at before, I've reduced my cost basis all the way down to actually below $100 now. So that is a very interesting mark for me because we've seen a lot of resistance at that $100 mark. So to be able to get back to that point, I think it's an easy point for Alibaba to potentially get back up to if we see a couple positive news articles come out about, changes within China or changes within Alibaba as a business. So that is the first thing, cost basis lowering. The second thing is tax season is coming up. So I actually have, purchasing now, if I wait 30 days, I can sell out of the first half of shares that I bought and claim that as a loss on my taxes. And what that does for me is that'll offset a lot of the gains that I've taken over the last year in other stocks. I took gains on Activision Blizzard was a big one, right? They spiked up. I bought them before the Microsoft deal and, made a fairly good amount of money there. And then also a couple other gains that I've had throughout the year. So overall, if I sell Alibaba, within the next 30 plus days from now, which is sometime, towards the end of November, then overall, I can write that off against my taxes and, basically offset any of those gains and not have to pay taxes on them. So that is another huge positive that I see. If I see Alibaba spiking up a lot over the next, month or so, then I probably won't do that. I probably won't sell out of my shares. I'll give you an update video on that as that kind of comes about. But that's kind of just my opinion is if Alibaba spikes back up and gets closer to that $100 mark, then it makes more sense to hold on to my shares because I think there's a lot of positivity coming towards Alibaba over the next 6 months to potentially year that could drive the stock up in a major way. So again, that is all my opinion on the stock. Do your own research, make your own decisions. If you think Alibaba is a good buy, then buy in. Personally, I think the risk is worth the reward, but that is just my opinion. If you don't believe that, then now might be a good time to actually sell out of your shares because there's a lot of negativity around the stock and it continues to drop further and further down. So overall, I hope you enjoyed the video. If you did, make sure to drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.